Good morning. We'll begin with the cash flow statement, one of the most important area for your examination point of view. Okay. Before we start with cash flow statement, we know there are three activities. What is the first one? Operating activity. Simple. We take which one? Cash from operations. Cash from operations. What is a cash from operation? That is your main business operation. It depends upon your business. For example, if you're running a textile showroom, whatever is the sales revenue that you are getting, let it be cash sales or collection from debtors, or let it be commission based sales also. For example, in showrooms, all the goods are not sold on what? Purchase and sale basis. Certain goods we deal on what? Commission basis. Certain goods we deal as an agent also. So all the things are considered for which one? Cash flow statement, that is operating activity. Trading commission received. See, for your business, sometimes if you are running in SEZ, special economic zones, you may get a government subsidy also. Cash subsidies received. That is also taken as which one? Operating receipts only. Okay, if you get any duty drawback, okay, that is connected with which one? Your operations of business, that is also operating activity. Anything that is connected to your main business activity or core business operations, we call it as which one? Operating activity. Cash from operating activity. Okay, anything. Suppose if you are getting a subsidy in the nature of revenue, that is operating activity. Suppose for purchase of plant and machinery or for purchasing a land, if the government is giving subsidy, that will be part of your investment activity. That will be adjusted with what? Cost of the asset. There are two methods which we will see. You take the gross purchase price minus subsidy received, or take the gross purchase price as outflow, subsidy received as what? Inflow. If it is connected with assets, we will deal in what? Investment activity. I'm talking about operating in nature, revenue in nature, all the revenue subsidies received. Okay. All operating payments made. It can be for cash purchases, it can be payment to suppliers, or it can be any other operating expenses, wages, salaries, rent, insurance. You call it as any operating expenses. We call it as which one? Operating activity outflow. Please remember, we are preparing which one? Cash flow statement. So, we are going to do accrual basis or cash basis. What is collected and what is paid we are going to see. Sometimes they would have given salaries on accrual basis. You should not see accrual basis. You should see which one? Payment done for salary, payment done for insurance, payment done for various other expenses you have to look into. So receipts minus payments will give us what? Operating activity net inflow. Now there are two or three things that you have to understand. What about interest paid? Is it an operating expense or non-operating expense? Let me not confuse you with Western school of thought, IFRS method of thought. Let us go with our accounting standard 3, which tells interest paid is a financing activity. Interest paid is a financing activity outflow. Interest on loans, interest on debentures, interest on bonds, any type of interest that you pay, that becomes which activity? Though we charge it in P&L account, that is financing in nature. Record as which activity? Financing activity outflow. Paid, you should take it. Same way, dividend paid also should be taken in which one? Financing activity outflow. What about tax paid? What about tax paid? Yeah, tax is an end result of your business operation, business profit. So that is normally taken as which activity? Operating activity. But for practical reporting, there may be something else which I do not want to confuse you with. Sometimes tax may arise because of your income from other sources also. Non-operating activity incomes also. That segment should be split. That is for practical reporting. For examination point of view, tax paid should be taken as which activity? Operating activity. Then, if you are a banker, what about interest paid by the banker? Interest paid by the banker. For the banker, what is their main business? Borrowing and lending. So interest received and interest paid. For a banker, it will become which activity? Operating activity. For a non-banking business, interest paid is taken as which activity? Financing activity. Okay, for example, I am having 6 floors of building. 4th and 5th floor is vacant. 6th floor is also vacant. I let it out and get a rent. Rent received. Which activity? That is investment activity. My business is textile. Anything from associated with textile, we call it as which activity? Operating activity. Non-business income. It can be interest received, rent received, dividend received. That will go to which activity? Investment activity. That is connected with my investment activity. So only for a banker, interest received and paid is taken as which activity? operating activity. There are certain non-cash items like depreciation, loss on sale of assets, bad debts written off. Those things are not resulting in what? Any cash outflow. We will not include this in receipts and payments. Okay. So there are two methods of working which you note already. One is which method? Direct method. What is the first one? Take the cash sales, take other incomes which are associated with your business, like commissions, okay, trading commissions, agency commissions, all those things. Then cash collected from what? Debtors and bills receivable, also part of what? Operating receipts. Payment made for cash purchases, payment made to creditors and bills payable, payment of other operating expenses means maybe in ratio analysis you would have done this, right? What do you mean by operating expenses? Direct and indirect expenses, all your factory expenses, administration expenses, selling and distribution expenses, direct expenses paid in what? Paid out, okay? Not accrual basis, whatever is paid out, non-cash items you will not consider. This will give us cash flow before tax minus tax paid will give us what? Net in cash flow inflow or what? Outflow from operations. In this, some troubles can be added by your exam question paper setter. One is provision for tax. One is which one? Provision for tax. In the opening balance sheet, they will give you opening balance, of course. By balance, you can do by ledger method or a statement method. I go by ledger method. Closing balance will have what? To balance, carry down. When they create a provision, what is the journal entry they pass? Let it be provision for tax or proposed dividend or provision for depreciation. What is the entry they pass? P&L account data or to provision for tax. So by P&L account, this represents current year provision. If you tally the ledger, it will give you what? To cash or bank, this will give us what? Income tax paid. Only this income tax paid will be taken as which activity? Operating activity outflow. Only this will come in what? Operating activity outflow. Some problems they will give you income tax paid. Based on that you have to work out what? Current year provision. Sometimes they will give you current year provision, based on that you have to work out what? Income tax. Sometimes they go little advanced also. Let us take up this problem, like 2021 balance sheet, 2022 balance sheet is given. We are given provision for tax. Provision for tax. They have given opening balance as 5 lakhs. Okay, 50,000. Closing balance, let us take it as 60,000. Okay, they will give you unpaid tax or tax due. Opening balance 2,000, closing balance 4,000. Okay, in the adjustment they will tell you current year provision made rupees 5 lakhs. Current year provision made is rupees 5 lakhs. Now how much of tax is paid? You will show it in cash from operating activity. So prepare the provision for tax account. By balance brought on how much? 50,000. To balance carried on how much? 60,000. What is the current year provision? 5 lakhs. Current year provision is like 5 lakhs. As a balancing for, we get what? This is a tax payable. This is not tax paid. This should have been paid. Tax payable. Cash outflow should have taken place for this amount. 5 lakh 50 minus 60, how much it is? 4 lakh 90,000. But have you paid this? Have you paid this? There is an unpaid tax at the beginning of the year and what? End of the year. So suppose if this unpaid tax is not given in the problem, then what you would have done? This tax paid would have taken as cash outflow. Since unpaid tax is given in the problem, what to do? What is the tax payable? What is the tax payable? 4 lakh 90,000. Okay. This closing balance is unpaid. Closing balance is unpaid less whatever is not paid at the end of the year. Please remember, we are not doing accrual basis. We are doing which one? Cash basis. What is not paid? 4,000. Add opening balance. They would have paid, because you cannot keep it for 2 or 3 years. They would have paid how much? 2,000 opening balance. So how much is paid? Out of 4 lakh 90, 4,000 is not paid. Opening balance they would have paid in the current year. What is the amount paid? 4 lakh 88,000. This is what you have to show it as what? Tax paid in which activity? Operating activity. Please note this, then we will proceed. Have you dealt with this adjustment in the regular class with unpaid tax? If it is dealt with, very good. If it is not, please take it, because this is a point they can add additionally. Normal question is just prepare the provision for tax account. Balancing for is what? Tax paid. Tax paid should be taken. But since there is an unpaid tax given, we don't take the balancing for as paid. We see what is the tax that should have been paid minus whatever is not paid. Add what? Opening balance that should have been paid in the current year. This will give us tax paid during the year. This is what is going to be shown in what? Cash from which activity? Operating activity. Done. So, yeah, please make it little fast. Next. See, in the cash from operating activity, this is which method? Direct method of working. Like receipts minus payments is the direct method of working. Which one? Cash from operating activity. We have got a reverse working method also. What is a reverse working method? When you are not given details about sales, purchases, operating expenses in the exam, then we have to go by which method? Reverse working method, where we will take which one? Net profit for the year. We will add back all non-cash items like provision for depreciation. Okay, even provision for tax is a non-cash item. That's why we add back. Okay, proposed dividend is a non-operating item as well as what? A non-cash item. Loss on sale of assets, like that. All non-operating items, non-cash items will be added back. Even interest paid or payable will be added back. Why? Because our net profit is after charging all these things. Our net profit is after charging which one? Both operating as well as what? Non-operating items. Okay, add back those non-operating items and which items? Non-cash item, because our objective is to find out which one? Our objective is to find out? Yeah, cash from operation. Add back all the non-operating items, non-cash item, transfer to reserve, provision for tax, proposed dividend, depreciation. Amortization refers to intangible assets and fictitious assets like goodwill written off, patent written off, all those things. Loss and sale of assets, then provision for doubtful debts, then interest paid, all those things. If you transfer back from reserve, sometimes for inadequacy of profits, to declare dividend, they will take it from general reserve and declare dividend. If there is any such transfers made, you do it. Profit on sale of assets is a non-operating in nature, eliminate it. Then, if you find any non-operating incomes like dividend receipt, interest receipt, all those things, you eliminate it. So, if you adjust for non-operating items and non-cash items, you will get which one? This is called as cash flow before working capital changes. Okay. Because of working capital also, inflow or outflow will take place. For example, opening stock was 1 lakh, closing stock is 50,000. Okay, debtors. Opening debtors 1 lakh, closing debtors 50,000. Reduction in debtors, this will result in? Reduction in debtors will result in?
Profit on sale of assets. So increase or decrease will, decrease will affect that. So why are you looking at that?
We are doing which method? Indirect method. So what we are going to find out? Cash from operating activity. So you should eliminate both what? Non-operating expenses as well as non-operating income should be adjusted. So add back non-operating expenses if it is a loss on sale of asset. If there is a profit on sale of asset, eliminate it. Why? Because my profit includes what? Both operating as well as what? Non-operating item. Adjust for all these things. Coming back, if there is a reduction in debtors, what is the meaning? We collected money from debtors. It will increase your cash balance or reduce your cash balance? It will increase your cash balance. That's why we add a decrease in current assets. We add what? Decrease in current assets and this is plus. Plus increase in what? Current liabilities also. Why? When current liability goes up, it is more, creates what? More inflow to the business. Increase in current assets creates what? Outflow. It is like purchases. Decrease in current liability also. We pay the money. It results in what? Outflow. So when you adjust for working capital changes, we get which one? Cash flow before extraordinary items. Extraordinary items are those which should not happen in your business. If it is going to happen, it may result in shutdown also. Like loss due to earthquake, flood, riot, all those things. Extraordinary items are like unusual items that is going to affect your business. If there is any, you have to show it separately. minus tax paid, minus what? Tax paid will give us what? Cash from operating activity. So this is the first part. Two methods of doing. One is which method? Direct method. Another one is what? Indirect method. But indirect method is what is widely tested in the exam. Direct method rarely that is tested, but we should recap that also. But indirect method is what? Widely tested in the exam. Then cash from which activity? Cash from which activity? Investment activity. Cash from investment activity is the next one. This is related to your assets. See, if operating activity is related to your what? P&L account. This investing activity is related to your assets. Purchase and sale of which one? Assets. Any non-current asset that you buy or sell, that will be reflected in which one? Investment activity. For example, purchase of plant, property, equipment, purchase of goodwill, purchase of land, building, furniture. Any non-current asset that is purchased, that is called as which activity? Investment activity. Not only that, purchase of long-term financial instruments like investment in shares, debentures, bonds, that is also reflected in which activity? Investing activity. Simple. When you buy, outflow. When you sell, it is an inflow. One extra thing is this income from investments. Income from investment. For example, interest, dividend, all those incomes you have to consider. So this is more to do which activity? Asset side approach. Now here also, they can add a complication by giving what? Depreciation on assets. Okay. Now let me do a problem. This is part of a lengthy problem. Instead of solving a lengthy problem, difficult adjustments when we deal it, then lengthy problem becomes what? Easy for us. Take up this. Please take it up along with me. 2021, 2022. Fixed assets cost 5 lakhs. Opening balance, closing balance 8 lakhs. Fixed assets, opening balance 5 lakhs, closing balance 8 lakhs. Accumulated depreciation, opening balance 1,50,000, closing balance 1,70,000. This is your accumulated depreciation, otherwise can be called as what? Provision for depreciation also. Accumulated depreciation or provision for depreciation. This is given in the balance sheet. Fixed assets costing rupees 1 lakh, accumulated depreciation 40,000 was sold for rupees 50,000. Number 2, fixed assets costing rupees 5. Take up this. Adjustment. Please be careful. Fixed assets costing 1 lakh. Accumulated depreciation was sold for 50,000. Okay, fixed assets costing 4,80,000 was purchased. Current year depreciation is 80,000. Some fixed assets were written off due to what? Technological issue. The question is, what is the impact in P&L account? That is cash from operation. What is impact in which activity? Investment activity. In cash from operation, we will add back what? In cash from operation, we will add back indirect method, non-cash items and what? Non-operating items, which can be loss on sale of assets or fixed assets written off. What do you mean by fixed assets written off? Assets having no value, no usage, no resellable value, we will what? Write off. So that is what is missing in the problem. So you have done by different methods. Maybe you would have prepared asset disposal account method or normal provision for depreciation account method. I will go with a simple provision for depreciation account method. Or can you try this and find out? Can you tell me how much of fixed assets were written off and what is the loss that is charged in P&L account? Fourth point, they have not given the values. You have to find out the values. Try. Fixed assets will have which balance? To balance brought on how much? Your screen is visible. There is no issue in the screen. I have shared the screen. I hope it is visible. Kindly exit and join the meeting, or you will find the screen. Opening balance is 5 lakhs. Yeah, I'm not visible because camera is not working properly. By balance carried on how much? 8 lakhs. Try to do it. You try to do it. Provision for depreciation account by balance brought down. What is the opening balance? 1,50,000. What is the closing balance? 1,70,000. See, let it be accounting or cash flow statement. Wherever there is a doubt, you pass a journal entry, you will get it. What is the first one? Fixed assets costing 1 lakh, accumulated depreciation was sold for 50,000. What is the journal entry you will pass for this? Debit what comes in? Bank account debtor, how much? 50,000. Accumulated depreciation account debtor. When the accumulated depreciation account is maintained, we close that also. To which account? To fixed assets account. What is the value of fixed assets? Cost 1 lakh. As a balancing for you will get which one? Loss on sale or P&L account. How this will be posted? By bank, how much? 50,000. By bank account, 50,000. By accumulated depreciation, how much? 40,000. By loss on sale, that is charged in which account? Wait, what will be the impact of this one? It will come as what? In the provision for depreciation to come as to fixed assets account how much? 40,000. To the extent provision not recorded, you will charge it and close it. To fixed assets account 40,000. Next. What is the entry for current year depreciation? When you maintain a provision for depreciation account, it will be depreciation account data to provision for depreciation. What is the depreciation for the current year? 80,000 we charged. We are given purchase of asset also. What is the purchase of fixed assets given? 4,80,000. Now, if you roughly tally this fixed assets account, as a balancing for, you will get cost of fixed assets written off. Don't tally that. Tally the provision for depreciation account, 1,50,000 plus 80, 2,30,000. But debit side we have got only 2,10,000. This represents, yes, exactly, to fixed assets account, depreciation on the asset written off. Depreciation on the asset written off, you will get it as which one? A balancing figure. What is a balancing figure? 10,000. So this is the depreciation on the asset, 20, yeah? Okay, 20,000. Now, how this will be charged? By accumulated depreciation account, how much? 20,000. The balancing for will give us by P&L account. Asset written off. Asset written off means the asset has no value, it's written off, that's all. So how much you get? 9,80,000 minus all these things. This is a balancing figure. Otherwise, without these two, if you tally the account, what is the balancing for? You will get 80,000, you will get. So this balance in depreciation is attributable to what? Asset written off. So the balancing figure, this is like book value of the asset written off. Now coming to the question, what is the impact in P&L account? What is the impact in P&L account? We will add back, in indirect method, we will add back what? Current year depreciation. What is the current year depreciation? 80,000. Then loss on sale of fixed asset. What is the loss on sale of fixed asset? 10,000. Loss on sale of fixed asset is 10,000. Then fixed assets written off, that book value. What is the balancing figure? 60,000. So this much will be added back. This much will be added back. Impact on investment activity. Simple. Purchase of fixed asset. Purchase of fixed asset how much? 4,80,000. Then sale of fixed asset. Only the cash inflow and outflow will come there. 50,000. So net cash outflow 4,30,000. We add back these items because they are either non-operating in nature or non-cash in nature. This current year depreciation is like what? Non-cash in nature. Loss on sale of fixed assets and fixed assets written off are like what? Non-operating in nature. They are non-operating as well as non-cash. So we will add back 1,50,000. In the investment activity, we will show which one? Purchase of fixed assets and what? Sale of fixed asset. This is the adjustment in some problems or some students might go wrong. Okay. Normally you will be able to do the first part. This there is no issue. First adjustment there is no issue. Second adjustment also no problem. Fixed assets account data to cash or bank. Third adjustment also no problem. Okay. Depreciation account data to fixed assets account. Fourth adjustment only. If assets are written off, we are not getting any cash. The balancing for in provision for depreciation represents what? Depreciation on the assets written off. If you tally the account without these two, you will get 80,000 balance. It is not 80,000 to be transferred to P&L account. In that 80,000, 20,000 is attributable to what? Depreciation. What is the amount written off actually? 60,000. That is what is going to be added back in your cash from which activity? Operating activity. Take up this, then we will proceed. Yes, Harija Sultana, any doubt? You can just unmute and ask. You raise a hand. Okay. Now coming back to the next adjustment, provision for tax. Already we learned. Next one is proposed dividend. Let's assume if no adjustment is given. The problem, they just give you opening and closing balance of which one? Provision for tax and proposed dividend. No further adjustment is given. What will you do? They just specified this much provision for tax, opening balance, closing balance, provision for tax is this much. Proposed dividend also given like that. Further adjustments are not given. If no adjustments are given, opening balances will be treated as paid. Opening balance will be treated as paid. For example, tax opening balance. Tax paid will come in which activity? Cash from which activity? Operating activity. Dividend paid? Financing activity. Okay. Closing balances will be treated as current year appropriation. Simple. We will add back. While calculating CFO, we will add back what? Closing balance, which one? Closing balance of which one? Provision for tax. What is the reason? Simple. If nothing is specified, okay, let us take dividend. Let us, for this year, on 31st March, they finalize the accounts. The directors will recommend the dividend. Directors will recommend the dividend. When this dividend will be paid? This year itself or next year? They have to hold AGM, they have to get the approval of the shareholders through ordinary resolution or whatever. Only then dividend will be declared. That's why last year dividend, we take it as what? Paid in the current year. Last year dividend, we take it as what? Paid in the current year. Closing balance is just an appropriation, amount just set aside. It will be paid in which year? Next year. So, closing balance we will add back while calculating under indirect method for which one? CFO. Clear? So, if no adjustment is given, this is the treatment. Okay? Just to recollect and note. Now, let me give a proposed dividend adjustment alone. Note this, then we will proceed. See, instead of solving a lengthy problem, let me do small problems for all the important adjustments to be done. Let's assume they have given only up to this. They have given only up to this. Proposed dividend opening balance 5 lakhs, closing balance 6 lakhs. No other adjustment is given. So what will you do? Opening balance will be taken as paid. Closing balance will be taken as current year appropriation. Current year appropriation. Let's assume they have given unpaid dividend along with this. Opening balance 4,000 they have given. Closing balance 5,000 they have given. No adjustment is given. What is the dividend paid? See, current year proposed dividend is how much? 6 lakhs. There is no doubt in it. But how much of dividend is paid? Not 1 lakh. If no adjustment would have been given, what you would have done? Opening balance, you would have taken as what? Paid. How much? 5 lakhs. Apart from this, what is the unpaid dividend at the beginning of the year? That would have been paid. What is unpaid dividend at the beginning? 4,000. That would have been paid. Less unpaid at the end. How much? 5,000 not paid. 5,000 not paid. So out of 5 lakhs, this one is paid and this one is what? Not paid. So what is the dividend paid for the year? 4,99,000 is the paid for. So in the examination, in the financing activity, you will show only how much? 4,99,000. You will show 4,99,000 only. And in the cash from operating activity, current year provision for dividend or proposed dividend, you will add back how much? 6 lakhs. Simple. If this adjustment would not have been given, what you would have done? 6 lakhs you would have taken as current year appropriation. 5 lakhs you would have taken as what? Paid. Since there is an unpaid dividend given, opening balance is taken as paid and closing balance is what? It to be paid. So what is paid? This will come in which activity? Financing activity. So these are the 2 or 3 adjustments where normally students get some trouble. Number 1, provision for tax. Number 2, which one? Fixed assets with accumulated depreciation. Number 3, which one? This proposed dividend with which one? Unpaid dividend, things like that. Other things you will be definitely able to make out. For example, they would have redeemed debentures. When you redeem debentures, it's a financing activity outflow. If you pay any premium on redemption, for example, debentures worth 1 lakh is redeemed at a premium of 10%. 1,10,000 you will show in financing activity. Where will you show that extra 10,000? Yeah, 1,10,000 you will show it in financing activity. The 10,000 extra paid is a non-operating item. 10,000 extra paid is a non-operating item. You will add back to CFO. You will add back to what? CFO. We will see such problems. We will see such problems. But these are the 3 or 4 areas which I wanted to tell or discuss before we go with the lengthy questions kind of a thing. So P&L account approaches which one? Cash from operating activity. Asset side based approaches which one? Non-current asset based approaches which one? Cash from investment activity. Non-current liability, borrowing or repaying, issuing or redeeming, dividend paid. All those things are part of which activity? Financing activity. Are part of which activity? Financing activity. TDS refund, if it is done, that will be adjusted with tax paid. If you get any tax refunds, tax paid minus tax refund, net amount you can take it. Or in some textbook they would have included TDS refunds as inflow, total gross tax paid as what? Outflow. Advance tax also treated like that. Shall we? If you have done this, please open and go through question number 1. There are a lot of alignment errors. Okay. Capital reserve is 0 and 48. Capital reserve is 0 and 48. Thereafter, everything you have to shift down. General reserve 816 and 960. This is 48 only. This is 48 only. General reserve 816 and what? 960. P&L account 288 and what? 360. ஒரு மேல் லைன் போயிடுச்சு அவ்வளவுதான். 960 and what? 672. Current liabilities 576 and what? 624. Proposed dividend 144 and what? 174. Provision for tax 432 and what? This is 18. I hope other things don't have an issue. Here actually this is the balance. Investment is 480, 484. Please make a change. Please make a change and then let us proceed. Capital reserve is only what? Capital reserve is only opening balance is 0, closing balance is how much? 48. General reserve, opening balance is 816, closing balance is 960. P&L account, opening 288, closing 360. Debentures 960 and 672. Current liabilities 576, 624. Proposed dividend 144 and what? 174. Provision for tax 432 and what? 408. Unpaid dividend. What is the closing balance? 18. This is actually book value. 3,840 minus accumulated depreciation. They have given which value? Book value. Investment is 480 and 384. Cash 210 and what? 312. Other current assets 1134 and 1272. Preliminary expenses are given. And be careful in the exam problem. Sometimes purposefully they would have interchanged and given. Okay, so 2016 first balance sheet, next balance sheet 2017 is given to us. Sometimes they would have what? Interchanged and given. While working out only, we'll come to know all these things. So be careful on that. Look at the additional information. During the year, fixed assets worth book value how much? 2,40,000. Accumulated depreciation 84,000 was sold for 1,20,000. Okay, provide depreciation 4,20,000. Investments were sold at a profit and the profit was taken to what? Capital reserve. Then it is decided to value the stock at cost, where it is the practice to value the stock at what price? Cost minus 10%. Opening stock and closing stock they have given. Like a rectification of error. You have to adjust and take it. Then write off the fixed assets costing how much? 60,000. Accumulated depreciation how much has been provided? 48,000 has been provided. So how much will be the loss? Out of 60,000, 48,000 accumulated depreciation means what is the loss? 12,000 you will charge it in which account? P&L account, like a CFO, indirect method you will add. Debentures were redeemed at 105 means 5% premium. 5% premium. Prepare what? Cash flow statement. So first let us prepare accounts required for the adjustment. What are the things? Fixed assets account and accumulated depreciation account let us prepare. Investment account also we can prepare. Please remember that profit has not gone to P&L account. The profit was credited to which account? Capital reserve account. Start. Let us start with working notes. I will also work along with you. You just tell me the answers. Fixed assets, what is the opening balance?
384.
380?
400.
Closing balance?
4560.
Depreciation, that is reduced, this one. 1104, 1392. Then look at the first adjustment. Book value 2,40,000, sold for 1,20,000 means what is the loss? It is not cost. Book value 2,40,000, sold for what? 1,20,000 means what is the loss? 1,20,000 is the loss. What is the accumulated depreciation on the asset? Accumulated depreciation on the asset is how much? 84,000. So by bank account for the asset sold, by accumulated depreciation, by P&L account for the loss on sale. By P&L account is nothing but the difference between what? Book value and selling price. Please remember it is not cost of the asset. Book value means which value? WDV. So on the fixed asset sold, you write off that 84,000. Then, what about this accumulated depreciation? What is the book value of the asset? It is sold for. So what is the loss? Now what do you mean by book value? Book value. This 2,40,000 is not cost. Earlier in the example I was using the word what? Cost. Actually the cost is like this. What is the book value? 2,40,000. What is accumulated depreciation? 84,000. Cost of the asset would have been Cost of the asset would have been 2,40,000 plus what? 84,000. This would have been the cost of the asset. 3,24,000 would have been what? Cost of the asset. Any of that doesn't matter for us. Book value means the cost minus what? Depreciation. Sold for 1,20,000, loss is 1,20,000. So accumulated depreciation is written off. Next. What is the cost of fixed asset written off? What is the cost of the fixed asset written off? 60,000. Accumulated depreciation for that? 48,000. Okay. So what is to be charged in P&L account? 12,000. If you want a journal entry, P&L account debtor, how much? 12,000. Accumulated depreciation account debtor, how much? 48,000. To fixed asset, 60,000. Post this. By accumulated depreciation, how much? 48,000. We would write off how much? 12,000. Now tally this. You will get this as a balancing figure. Purchase of fixed assets, you will get it as what? Balancing figure. Now the rupees in thousands are given. Value should be in thousands. Okay, that is also not typed down. Oh my God. The value should be in thousands. Value rupees should be in what? Thousands. So let us add 3 zeros to it all. In thousands. What is the balancing figure? Purchase of asset, we get it as a balancing. Here you will get current year depreciation also as a balancing figure. So what will be the impact when you prepare cash flow statement? The sale of asset, where it will come? Investment activity. This purchase of asset will come in what? Investment activity. Then loss on sale and asset written off. What is the loss on sale? This 1,20,000 and asset written off will be adjusted in what? CFO. Non-cash item, non-operating item, like that we will add. This current year depreciation. Current year depreciation will also be adjusted. This will not come in P&L account. Okay, accumulated depreciation on the asset written off or asset sold. Okay, asset being charged in P&L account? No. This part, 84,000 and 48,000, that was not recorded in P&L account. It's between provision for depreciation and fixed asset. That will not be reflected anywhere. What is investment balance brought down? 480 and 384. Try to find out the purchase of investment, let us see. Purchase or sale, whatever it is, try to find out. Once again I repeat, any doubt in the first three credits? By bank for sale, by accumulated depreciation on the asset sold is 84,000. Loss on sale of asset is how much? 1,20,000. Book value minus selling price will give us what? Loss on sale. Please remember, it is not cost of the asset, it is book value of the asset sold. Then cost of fixed asset written off is 60,000. Accumulated depreciation is how much? 48,000. So P&L account 12,000 should be taken. Loss. So record the depreciation on the asset sold and asset written off. You will get depreciation for the current year as a balancing figure. As a balancing figure in assets, we get what? Paid for purchase of asset. Try to prepare investment account and tell me the sale. Look at what is given in the problem regarding investment. What is given regarding investment? Some investments were sold at a profit of what? 48,000, and the profit was credited to capital reserve. The profit was credited to which account? Capital reserve. The profit was credited to capital reserve account. Wait, what is the journal entry they would have passed for transferring the profit? Investment account debtor. Did they transfer to P&L account? They transferred to which account? Capital reserve account. How much has been transferred? 48,000. Since we maintain in full values, 48,000. Now, if you pause this entry, investment account debtor to which account? Capital reserve account, how much? 48,000. As a balancing for you will get, yes. Now, here also some students go wrong. Where this 1,44,000 will appear? Sale of investment. Where this 1,44,000 will appear? Investment activity. What about this profit on sale of investment?
Operating.
Think. What is the profit on sale of investment? 48,000. Where this will affect? Will you adjust in cash from operation? No. Listen, pay attention. Why are we adding back non-operating items, non-cash items and all? We're doing in an indirect method. Net profit we take. Add back losses, add back provision for tax. Why do you do? Because those items were already charged in P&L account. We add back to get CFO. Likewise, we eliminate profit on sale of asset, interest receipt, dividend receipt. Why? Your net profit includes those items. That's why we eliminate them. Now, this 48,000 profit, was it taken to P&L account? This was transferred to which account? Capital reserve. Otherwise, your profit is not affected or not including this 48,000. No adjustment required. From this, you should understand any item, non-cash or non-operating item recorded in which account? P&L account only should be adjusted. This is not taken to P&L account. This was taken to which reserve? Capital reserve. So no further adjustment required. Only this 1,44,000 you will show it in which one? Which activity? Investing activity. Next. Adjustment for stock. Wait. What is the opening current asset? What is opening current asset? What is the opening current asset balance? 1134 1272. 1 Okay. What is the profit and loss account at the end, or reserves and surplus at the end? Reserves and surplus at the end of the year. Okay, sorry, P&L account itself we can take it. What is P&L account? What is the closing balance? 3,60,000 less opening balance. What is opening balance? 2,88,000. Difference between closing balance and opening balance will be taken as what? Net profit after appropriation. Net profit after appropriation. What is the net profit after appropriation? Because of the change in the valuation method of stock, whether your net profit will get affected? Yes. Look at adjustment related to stock. Opening stock is how much? 2,59,200. What is the closing stock? 3,60,000. Is it overvalued or undervalued? Is it overvalued or undervalued?
Net value on the opening stock.
It was the practice to value the stock at cost less how much percentage? 10%. We have now decided to value the stock at what? Cost. See, closing stock, there is no problem. Closing stock, there is no problem. Read it. What is the opening stock? 2,59,200. Is there a trouble because of closing stock? Closing stock is what? Correctly valued. No adjustment for which stock is required. Closing stock is required. Now listen, if opening stock is undervalued, what would have happened to net profit? Opening stock, simple. Let us go by a normal crude approach, not financial accounting approach. Opening stock is a debit item or credit item? Debit item. In the debit side, is it overvalued or lesser undervalued? So when you put an lesser amount, what will happen? Profit will be overstated. Profit will be what? Overstated. So what to do? Less overvaluation of which stock? Overvaluation or sorry, undervaluation. Undervaluation of which stock? Opening stock. Undervaluation of opening stock. What is the value given? 2,59,200. 2,59,200. This into how much percentage undervalued? 10 by 90. Why 10 by 90? If cost was 100, value 10% less, we have taken what? 90. So 2,59,200 into 10 by 90. How much? So eliminate this. This will give us corrected net profit. For CFO, we will take this net profit after adjustment of which value? Stock. This is what we are going to start with. 43,200. Once again, why are we reducing? If opening stock is undervalued, a debit item is put lesser amount, means what will happen? Profit will increase, we reduce it. It's like a rectification of error. And with the current asset also, add adjustment for stock. Adjustment for stock, how much you have to add? Stock was undervalued. Opening stock was undervalued. We have to add how much? 28,800. So this will give us correct value. Correct value of current assets. So 11,34,000 plus 28,800. Closing stock, no adjustment required because it is correctly valued. So while doing the adjustment, while doing which adjustment? And the increase in current asset, decrease in current asset, you should take which value? This value. Adjusted values, you have to take it. Now we can start with our main answer. Always maintain particulars. Thereafter, minimum 2 amount columns. You can maintain 3 amount columns also, but minimum how many amount columns required? 2 amount columns required. Start. Cash flow statement. Net profit after appropriations. You can do it along with me. Which profit you will take now? 43,200. This after adjustment of stock you will take it. Then add all the non-operating items, non-cash items, etc. Go through the working notes that we have done. We prepared fixed assets account, loss on sale of asset. What is the loss on sale of asset? 1,20,000 we will add back. All non-operating items, non-cash items. That is fixed assets written off. Which one you will add? Full 60,000 or book value? Fixed assets written off. Out of 60,000, already 48,000 accumulated depreciation is there. How much will write off? 12,000. Then current year depreciation. Current year depreciation on fixed assets, we worked out as a balancing figure. Current year depreciation on fixed assets, we worked out as a balancing figure. How much? This one, 4,20,000. Then, whether this profit on sale of investment will affect your CFO? No, this was transferred to which reserve? Capital reserve. Then, come to the things. Look at debentures were redeemed at what? 105. Look at the debentures value opening balance. 960 opening balance, closing balance 672. Closing balance 672. What is the debentures redeemed? So that premium on redemption what is the total debentures redeemed difference? 960 minus 672. 2 lakh. This is redeemed at 105 means 5% premium. Debentures are redeemed at 5% premium. That value will come here. That premium is a loss, non-operating loss that will be charged here. Ensure whether all the adjustments are closed. Then let us go to the items which are not having adjustments. Add back loss on sale of fixed assets written off, current year depreciation on assets, premium on redemption of debentures. That capital reserve investment sold for a profit, it will not affect your which one? P&L account. We paid extra 2,88,000 into how much percentage? 5%. That will be adjusted here. Then what is the next one? Adjustments for this. We'll see. First we'll close all the adjustments. Adjustment number 1, 2, 3, 4, 5 is closed. Debentures are also closed. Debentures are also what? Closed. Now let us come to the adjustments. Let us come to the balance sheet which is not having adjustments. Wait. Whether this capital reserve will affect your CFO? No. General reserve, look at opening balance 816, closing balance 960. Yes, we made a transfer to general reserve. We made a transfer to general reserve. Add transfer to general reserve. What is the transfer to general reserve? How much? 1,44,000. 1,44,000. Then P&L account already adjusted. Look at 9% debenture circle here. Whether you have to pay any interest? Yes, we have to pay interest. Okay, when will you pay the interest? On which balance you will calculate interest? 960 is there, 622 is there. Okay, always please remember, whenever there is an issue of shares, whenever there is for examination point of view, whenever there is an issue of shares or an issue of debentures, assume that they are issued at the beginning of the year. Assume that they are issued at the beginning of the year. Why? Because we plan our financials for the next year. If we require, we will issue debentures at the beginning of the year. Redemption will take place at the beginning of the year or at the end of the year. At the end of the year, we will work out our financials, surplus funds, etc. and we will redeem. So the redemption would have taken place at the end of the year. So we have to pay interest on the opening balance. We have to pay the interest on the opening balance. Interest on debentures. How much? 9,60,000 into how much percentage? 9%. 9,60,000 into 9%. 86,400 is interest on debentures. Then, which item next? Current liability will not be affected here. What about proposed dividend? In the absence of information, what did I tell you? The closing balances. In the absence of information, the closing balances can be taken as what? Current year appropriation. So current year proposed dividend. Unpaid dividend will be adjusted with amount paid. What is the current year proposed dividend? Closing balance. 1,74,000. Let us do it a little bit fast. Then current year provision for tax. 4,08,000 adjusted. Then fixed assets already adjusted, investments already adjusted, cash also already, we have to see it. Other current assets already adjusted. Look at preliminary expenses. Opening balance 96, closing balance 48. It is like amortization. Preliminary expenses written off. What is the preliminary expense written off? Opening balance to closing balance. What is the difference? 48,000. So any other non-operating incomes like interest received, dividend received, profit on sale of assets, no other thing. This will give us CFO before working capital changes. Then add decrease in current assets and increase in current liabilities, less I hope we are not given current assets and current liabilities separately. Okay. This one, current assets, you have to compare these two values. 1,62,800. Sorry, 11,62,800 and what? 12,72,000. So 12 lakh increase in current assets. 12,72,000 should be checked with the adjusted balance after adjustment of stock. What is adjustment of stock? This 11,62,800 you have to see. Minus 11,62,800. What is the balance? One lakh 9,200 should be a minus amount. One lakh 9,200. Then look at the current liabilities, increased or decreased. So increase in current liability, that you can directly adjust and put. How much? 40. So adjust this, you will get CFO before tax. CFO before tax, before working capital changes, plus this minus this amount, less tax paid. Tax paid, opening balance will be taken as paid. Any unpaid tax given in the problem? No unpaid tax. So what is opening provision for tax? 4,32,000. This will give us CFO after tax. Then which activity? Cash from which activity? Cash from investing activity. Any doubts so far? Any doubts so far? Next, start. Cash from investment activity. Sale of fixed assets. We sold fixed assets for how much? 1,20,000. Sale of investment also. Sale of investment, we worked out as a balancing figure, I hope. Check the investment account. Sale of investment, how much? 1,44,000. Sale of investment, 1,44,000 we have done. Then, what is the next one? Less purchase of fixed assets. What is the balancing figure we got? Purchase of fixed asset? 11 lakh. Any income from investments? No. This is cash from investment activity. Cash from financing activity. Redemption of debentures. Redemption of debentures, how much? 2,88,000. At how much percentage it is redeemed? 105%. With premium we pay. Then interest paid. What is interest paid on debentures we worked out? 86,400. It's a outflow. Then, what is the next one? Dividend paid. What is the opening balance of dividend given? 144, like, how much is unpaid? 18 is not paid. So 144 minus 18. How much is paid? Then issue of shares are there. 1440, 1920. We have issued shares. How much issue of shares? 4 lakh. This will give us cash from which activity? Financing activity. Net increase or decrease? 976,800, 8,40,000, 34,800. Net increase in cash and cash equivalents. Add opening cash and bank balance. What is opening cash and bank balance given? 2,10,000. You get closing cash and cash equivalents. Three lakh 12,000. I go slow to explain and solve the problem to make people understand. But if you try it on your own now, this kind of a problem can be solved in maximum 20-30 minutes of time. You can be a little bit fast in solving, or definitely be faster in solving. This problem covered main adjustments, especially that fixed assets, which one? Provision for depreciation. Second is that profit on sale of investment transfer to which account? Profit on sale of investment transfer to which account? Capital reserve account. So that will not affect our which one? CFO, P&L. Okay. Then we have also covered a bit that unpaid dividend. Dividend paid will be opening balance minus whatever is not paid. Try question number which one? 2 on your own. In this problem, what doesn't matter in adjustment number 1? Cost of the machine doesn't matter because we are not given provision for depreciation separately. We are not given provision for depreciation separately? No. Look at liability side, they have given which one? Depreciation. This is nothing but what? Accumulated depreciation. Nothing but accumulated depreciation. No, you have to prepare properly. Fixed assets account. This is appearing at what? Cost. Plant and machinery is appearing at what price? Cost price is same like last problem you have to apply. So sometimes, when we don't see provision for depreciation on the asset side, we come to a wrong conclusion. Like we ignore this. No. You have to consider this and work out. Start. Land is not depreciable, of course. Purchase of land will be considered. There is no asset written off in this problem. Tell me the depreciation opening balance, by balance brought on, how much is given? 8,80,000. Closing balance? 13,20,000. Fixed assets, opening balance, that is plant and machinery. 50 lakh, 60,000. Closing balance? 69 lakh. Then what is the cost of the asset sold? 6 lakhs. What is the book value given for the asset? 60,000, which means accumulated depreciation. Accumulated depreciation is the balancing figure. Accumulated depreciation on the asset sold is the balancing for how much? 5,40,000. This asset is sold for how much? This asset is sold for 40,000, means what is the loss on sale? Yeah, record it. So by bank, how much? 40,000. By accumulated depreciation, 5,40,000 on the asset sold. Then loss on sale is how much? 20,000. You can prepare asset disposal account also, not an issue. Then as a balancing for, you'll get the purchase. $24,70,000. Current day depreciation also, you can get it as a balancing. They have not given a new machinery was purchased. That is nothing but this balancing. Having done this, we can start with which one? Cash flow statement. So net profit after appropriations. Let me to work along with you. Please tell me your net profit after appropriations. The reserves and surplus, closing balance minus opening balance can be taken. What is the difference? Add, first always close the adjustments. Loss on sale of plant and machinery. What is the loss on sale of plant and machinery? 20,000. Current year depreciation. Then adjustment number 2 is based on issue of shares. Anyhow, that will come in which activity? Financing activity. Then items not having adjustments. Which one should be taken? Current year provision for tax. What is the current year provision for tax? Then current year proposed dividend. Any other thing like preliminary expenses written off, discount on issue of share written off, goodwill written off. No other thing, right? So this will give us what? CFO before working capital adjustments. No non-operating incomes also. Then adjust for working capital changes. Tell me this part. Come to the current assets. Inventory increased, debtors also increased. What is increase in inventory? What is increase in inventory? 1 lakh. Inventory paranga. Change in inventory 1,20,000 or 2,20,000. Then increase in debtors. Increase in debtors 6,05,000. Then increase or decrease? What is increase in creditors? 1,60,000. What about bank loan? That is a non-current liability that will come in which activity? Financing activity. We are not mentioned that interest part component, so ignore it. We are not given about what is the interest rate on bank loan, so ignore it. Any other current asset, current liability to be taken? Cash and bank balance, that's a final adjustment. No. Proposed dividend provision for tax should not be taken because we treat it separately. Because tax is an operating outflow, dividend is an financing activity outflow. This will give us CFO before tax. So 32,50,000 plus minus these two. Less tax paid. Opening balance will be taken as paid. What is the tax paid amount? 4 lakhs. This is a CFO after tax. Next, which activity? Cash from investment activity or investing activity. What and all will come in investment activity? Sale of plant and machinery. What is the sale of plant and machinery we have done? 40,000. Purchase of plant and machinery. We got as a balancing figure. What is the purchase of plant and machinery? 24 lakh. Then land, is it purchased or sold? 33 lakh, 44 lakh, land purchased. For how much? 11 lakhs. Then, any income from investments? Any income from investments like interest received, dividend received, rent received, like that? No other thing. So this will give us cash from which activity? Investing activity. Cash from financing activity. Issue of shares mentioned in the problem, or you can check the balance sheets and take it. Issue of shares, how much? 22 lakhs. That causes inflow. Then loan taken or repaid? Loan repaid. Difference between opening balance and closing balance. How much? 8,80,000 minus. Then dividend paid. What is opening balance? This will give us financing activity. Net increase or decrease? Add opening cash and bank balance. What is opening cash and bank balances? 4 lakh. Is there a mistake? Check if there is a mistake. What is the answer before this O? What is opening cash and bank balances? 4 lakh. So done. This is for question number 2. We'll have about 10-15 minutes of break and we will continue with question number 3. Okay. So it will take about another half an hour, 45 minutes to complete or revise what? Cash flow statement. Thereafter, we will move on to investment accounts. We will move on to investment accounts. Probably before lunch, we should be able to complete, or whatever it is, investment accounts we should be able to do. Then we will move on to which one? Hire purchase. Hire purchase we will do. We are given equity share capital, there is no change. Preference share capital, opening balance 2 lakhs, 3 lakhs, closing balance, which means shares are issued, okay. General reserve is given, securities premium, P&L account, okay. 11% debentures are given. Creditors, provision for tax, proposed dividend, all appears the normal only. Goodwill, land and building, plant and machinery, investments of non-trading in nature, then stock, debtors, bank balance, prepaid expenses are given. Premium on redemption of debentures. Premium on redemption of debentures appears in asset side, which means that is not charged in P&L account. The premium is not charged in P&L account. Whatever is paid, they are picked to write off. Investments were sold off at a profit of 15,000. Machinery costing 80,000 was sold for 36,000. WDV was 45,000. Are we given any accumulated depreciation or depreciation? No. So in this problem, yes, really this cost doesn't matter for us. 36,000, 45,000. What is the loss on sale? 9,000. Depreciation 20% on the opening balance. Then there was no purchase or sale of land and building. Means what is the meaning? Look at land and building opening value 7 lakhs, closing values 6 lakhs 50 means we sold it or depreciation? Depreciation. Then provision for tax paid or made? Made during the year, which means we created a provision. Current year provision is given to us. Preference shares were issued for cash consideration, which means that will be taken as which one? Financing activity inflow. Financing activity inflow. So what ledger accounts need to be prepared? Investment account you prepare, then which account? Plant and machinery account you prepare, then provision for tax account you prepare, then we can continue. Okay, let me do it along with you, or you shall do along with me. Which account first? Which account? Okay, machinery account. To balance brought down. What is opening balance of machinery? You can do it fast. There is no big problem in this. What is the closing balance of machinery? 6 lakhs 60,000 by depreciation 20% on the opening balance. 6 lakhs into 20%. Depreciation. Then by bank, what is the sale price? 36,000. By P&L account, loss on sale how much? 9,000. No need of maintaining accumulated depreciation account because there is no accumulated depreciation. Next. Which account next? Investment account. To balance brought down. What is investment opening balance? Closing balance? 2 lakh?
20,000.
Profit on sale was transferred to which account? P&L account. Look at the adjustment. How much of profit was transferred to P&L account? How much of profit was transferred to P&L account? 15,000. Will it affect the CFO? Yes, this profit was not transferred to capital reserve. This was transferred to which account? P&L account. By bank account sale. What is the balancing for? 35,000. This balancing for to cash or bank for purchase. Prepare provision for tax account also. What is the opening balance? Provision for tax. What is the opening balance? 80,000. Huh? Is it paid given or provision made given? What is the P&L account provision made for the year? 96,000. What is the closing balance? The balancing will goes to tax paid. What is the payment made? 70? That is the balancing. Next. Anything else? Any special adjustment given? That's it. The other things we can directly do it in CFO adjustments. Net profit after appropriations. What is the closing balance minus opening balance difference? 90,000. Add back. First, let us finish the adjustments. Current year depreciation how much? 1,20,000. Then loss on sale of plant and machinery 9,000. Then the profit on sale of asset you will eliminate later. Less profit on sale of investment. This was not taken to capital reserve. So how much? Minus 15,000. What is the provision for tax made in the current year given in the adjustment? 96,000. So we closed investments, we closed missions, depreciation charge also we closed. There was no purchase or sale of building, means the balancing for is depreciation. Depreciation on land and building, difference between opening and closing balance how much? 50,000. Then preference shares were issued, that will not come over here. Then go to the items not having adjustment. Transfer to general reserve. Difference between opening and closing balance. How much is transferred? How much? 25,000. Then current year proposed dividend. What is the current year proposed dividend given in the problem? 1 lakh? 40? No adjustment is given. Closing balance is taken as what? Appropriation. Current year proposed dividend. Then, not over. Prepaid expense is part of current assets. Goodwill paranga. Opening balance is 1 lakh. Closing balance is 80,000, which means amortization. Goodwill written off. How much written off? 20,000 goodwill written off. Then land and building adjusted, plant and material adjusted, profit on sale are also adjusted. This premium on redemption will not come because we just paid the premium but not written off in P&L account. Premium on redemption of debenture, we redeemed the debentures at a premium, but that loss was not written off in P&L account. That's why it is shown as what? Asset. So will it affect your CFO? Only when a non-operating item is charged in the P&L account, we will what? Add back. Here it is not charged, nothing to be added. But is there a debenture interest? Yes, debenture interest. Five lakhs into how much percentage? 11%. They have not mentioned when the debentures are redeemed. We assume that debentures are redeemed at the end of the year. So we provide that interest for the whole year. That's it. In this problem, why are we not taking premium on redemption? That was not charged in which account? That was not charged in P&L account. That is shown in the asset side. Why are we adjusting the profit on sale of investment? It is clearly given that this profit on sale of investment has been credited to which account? P&L. Adjust for current assets and current liabilities. Stock increased or reduced? Decrease in stock. How much? 15,000 you will add. Then debtors increased. What is increase in debtors? 1 lakh? 27,000 increase in debtors. Then prepaid expenses decreased. What is the decrease in prepaid expenses? 4,000. Then creditors increased or reduced? Increased. 30,000. Adjust all these things, you will get CFO before tax. Five lakh 16,000 less tax paid. Look at the working note we have done. 70. This will give us net amount after tax. Next, which activity? What and all will come? Sale of machinery we have done for 36,000. Then purchase of machinery 2,25,000. Then sale of investments. Any other income from investments like dividend, interest, rent received? Next, which activity? Issue of preference shares. Whether equity shares are issued or preference shares are issued. Correlate, listen, there is an increase in securities premium also. There is an issue of preference shares and there is an increase in what? Securities premium also. What that indicates? Shares are issued at a premium. 2 lakh to 3 lakh, 1 lakh of shares are issued at what? Premium. So how much you will record here? 1,25,000. Face value plus premium. Don't record issue of premium. Okay. Issue of shares, total money collected. Then redemption of debentures, this also face value plus premium. Look at the face value reduced in debentures. 5 lakh to 3 lakh, 2 lakh reduced, and we have got premium on redemption. What is the premium on redemption given? This 20,000 should be considered. So 2 lakhs plus 20,000. Then debenture interest paid. What is the debenture interest paid? 55,000. Then dividend paid. That opening balance. 1 lakh. 1,36,000. Any other payment? Increase or decrease? Ensure that we have completed all the adjustments. I'm just relying on you and going ahead. Let increase. Add opening balance. What is opening balance of cash and bank? Much? 93,000 we get. After taking up this, read which question? Question number 4, that is a fantastic question. Question number 5 will be for your practice. You can find them in RTP, PTP or in a textbook also. You can find question number 5. So question number 4, you can read it. That's a different kind of a problem that was tested. Go through question number 5 after this. Sorry, question number 5, yeah. 4, yeah, question number 4 next. That paragraph style question. Plant and machinery account, okay. The plant and machinery account was asked for. Read through full question number 4, then we will solve it. Read the question. Total sales for the year 398 crores. Out of this, how much cash sales? This is relevant for cash from operation. Then, whatever is relevant for CFO, let us take it. Then, collection, how much is worth? 134 crores. Yes, that should be taken. Then, purchases, out of that, 220 crores. Credit purchase 80% means cash purchases would have been what? 20%. Then we are given creditors balances. You can just check creditors balance or like a statement you can do. What is the opening balance? 84 crores plus add the credit purchases minus closing balance how much? 92 crores. It will give us cash collection from debtors. Like a statement we can do. Supplier of other consumables are paid what? 19 crores in cash. That will come in operating activity outflow. Employee salary will come in what? Operating activity outflow. Look at fully paid preference shares of face value 32 crores redeemed. What is given? Equity shares of face value 20 crores was allotted at what? Fully paid premium of what? 20%. Are you paying any cash for this? What is equity share face value redeemed? 32 crores. For which what we are giving? Equity shares. We are cancelling preference shares and allotting which one? Equity share. Any cash consideration involved in this? Look at 32 crores. Here 20 crores plus 20% how much? 24 crores will be there. Let's assume you are a preference shareholder. How much I should pay you? 32 crores. I exchange 24 crores worth equity share. Means how much I should pay in cash? 8 crores. Only that cash payment will affect in which one? Which activity? Financing activity. Then debentures of 20 crores at 10% was redeemed. Debenture holders were issued equity shares in lieu of debentures. Are you giving any cash over here? Simple. 20 plus 10%, 22 crores we have to give. We are not giving any cash. We are just giving what? Equity shares. It will not come in which one? CFO or investment activity or financing activity. Then income tax paid. It will come in which activity? CFO. An old machinery costing 25 crore doesn't matter for us. Exchange of old machinery. The book value is 13 crores. All these things doesn't matter. Okay. After the negotiation, the vendor agreed to take over the old machinery at a higher value of how much? 15 crores. Okay. Now, how much you have to pay it in cash? What is relevant over here? We are purchasing a new machinery costing how much? 25 crores. What is the exchange value? 15 crores. How much you have to pay it in cash? That is only relevant for which activity? Which activity? Investing activity. Net outflow will be shown. Okay, we are not getting cash for 15 crores. Okay, 25 minus 15 net amount you have to pay. Then investment costing 18 crores were sold at a loss of 2 crores. Means investments are sold for how much? 16 crores. Dividend 15 crores, including dividend distribution tax paid. Dividend distribution tax, which activity? Financing activity. So this 15 crores, this includes dividend distribution tax. So entire 15 crores you will show it in which activity? Financing activity. Debenture interest 2 crores was paid. That will come in which activity? Financing activity. Opening balance in hand is given. You prepare which one? Cash flow statement using which method? Direct method. See, when you go for direct method, all this profit or loss is not relevant. How to work out under direct method? Receipts minus payments. Receipts minus payments. No working note required. Directly we can start with which one? Cash flow statement under which method? Direct method. Let us start. Cash for which activity? Operating activity. Operating receipts. Just record operating payments. What are the operating receipts? Let us go one by one. What is the first one? Cash sales. Cash sales how much? We can maintain in crores, 262 crores. Then collection from debtors. Collection from debtors how much? 134 crores. That is given in the second adjustment. Then purchases, cash purchases. 20% of your total purchases. Can do it along with me, don't wait. 44 crores. Payment to creditors. We can do a working note. What is the opening balance of creditors? 84 crores. Okay. What is the credit purchases? 220 into 80%. 176. Less closing balance. What is the closing balance? This will give us payment made. Or you can prepare a ledger account and find out. Since there is no discount, etc., payment made to creditors how much? 168. Then see only operating receipts and payments in this. Sub point number 4. Other consumables. Other consumables paid. How much is paid? 19 crores in cash paid. Then employees paid. How much? 20 crores employees paid. Check for any other operating payments or collections. So this is your receipts. We are doing under direct method, so don't take any non-operating item, non-cash item, etc. over here. So this will give us CFO before tax. 396 minus 251 will give us CFO before tax less tax paid, income tax paid. What is income tax paid given in the problem? 26 crores. So 145 minus 26 will give us which one? CFO after taxes. Cash from investing activity. Purchase of machinery, the cash component, 25 minus 15, how much we pay net? 10 crores. We don't get cash for the exchange, we just exchange with the old asset. Sale of investment, 18 crores were sold at a loss of 2 crores, means how much? 16 crores inflow. 16 crores inflow. Then any other inflow? Third, cash from which activity? What is the cash from financing activity? Preference shares redeemed. $32 crores we have to pay. Out of that, what is the value of shares exchanged? 24 crores, so you have to pay 8 crores. Then 32 crores you have to pay. Shares are allotted at 20% premium. So balance you have to pay 8 crores in cash. Then what is the next one? Debentures. Debentures nothing is paid. Debentures nothing is paid in cash. Dividend including dividend distribution tax, how much you have to pay? 15 crores. Then debenture interest. What is the debenture interest payable? This will give us net increase, cash and cash equivalents. Anything that we omitted? Add opening cash and bank balance. What is opening cash and bank balance? 2 crores, you will get closing cash and bank balance. What is the closing cash and bank balance? 102. So when we go for direct method, we are not bothered about non-operating items, non-cash items, okay, shares exchanged for assets or old shares redeemed with the new one, all those things. Actually, the question appears like a lengthy one or a difficult one, but a simple one to solve. But the problem is, in case of this open-ended question, we cannot verify our answer. At least, opening balance of cash, add what? That is net increase or decrease in cash and cash equivalents, it will give you what? Closing balance, we can tally and check. But this 1 or 2, whether it is correct or not, that is only difficulty. But of course, everything is clearly given, like what is collected and what is paid. So are you confident in cash flow now? To an extent confident in cash flow now? See, instead of being at home and solving on your own, okay, just come to the class where a person solves for you or solves along with you or before you, kind of a thing. With this, the cash flow statement is over. We'll go for an easy chapter, then we'll go for, of course, that is also easy chapter, only investment accounts. We'll do which one? Hire purchase first, then we'll go for which one? Investment accounts next.